Ladies and gentlemen, good day, and welcome to the Q4 FY23 earnings conference call of Aimco Pesticides Limited, hosted by TIL Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sayam Pokharna from TIL Advisors. Thank you, and over to you, sir.
Thank you, Ryan. Good afternoon, everyone. I hope all of you are well. Welcome to the Q4 and FY23 earnings conference call of the company. We have with us today from the management team, Mr. Sameer Dave, Executive Director, and Mr. Ashit Dave, Executive Director and Chief Financial Officer. The presentation for the quarter has already been uploaded on the stock exchange. In case someone wants to be added to the mailing list, please feel free to reach out to us. Before we begin this call, I would like to remind you all that anything and everything said on this call that reflects any outlook for the future, which can be construed as a forward-looking statement, must be viewed in conjunction with the risks and uncertainties that we face. These risks and uncertainties have been mentioned in our annual reports. With that said, I would now like to hand over the call to Mr. Dave for opening remarks, post which we can start with the Q&A session. Over to you, Ashit, sir.
Yeah. Good evening, ladies and gentlemen. Welcome to our Q4 and FY23 earnings conference call. As it is evident from our financial performance for the quarter and the year, Q4 and financial year 23 has been a challenging period for the company. Throughout the year, we've encountered several obstacles that impacted our performance. These include destocking at customer level, high inventory levels with trade channels, declining prices of agrochemicals and raw materials, as well as subdued demand in various markets. These dynamics weighed heavily on our results, affecting both volumes and sales across the board. Although we experienced some relief in Q4 compared to the previous quarter in terms of volumes and sales, profitability continued to decline. This was primarily due to the liquidation of high-cost inventories from previous quarters, leading to reduced gross profit margins and ultimately impacting both bottom line. This is the decision, although painful in the short term, proved beneficial as we observed further erosion in material prices in subsequent months. Current pricing environment for both finished product and raw material in the industry remains very dynamic, and we are maintaining extreme caution in limiting our exposure to such volatility. Furthermore, it is important to note that financial costs in Q4 were notably higher due to interest incurred on raw material purchase, while other expenses increased due to foreign exchange losses. This further impacted our bottom line for the quarter. We expect the gross margin to stabilize in the coming quarters, along with the one-off expense, thus adding to the profitability in the coming period. Looking ahead to Q1 FY24, we anticipate an outperformance compared to the previous 2 quarters on the sales front. We have already witnessed the resumption of dispatches to contract manufacturing, which began in April. However, it's essential to acknowledge that the industry landscape is still not as favorable as we initially anticipated at this stage. Price erosion persists due to excessive inventory in trade channels, and some spillover demands of Q1 to Q2 may happen. These challenges require us to remain vigilant and agile in our decision-making process. In light of the current circumstances, we are placing an increased emphasis on brand formulation sales for the upcoming year. Branded formulation demonstrated resilience in financial year 23, considering the overall industry situation. Therefore, our strategy for the coming year revolves around expanding into the regions with within our existing domestic market, and additionally, we aim to explore opportunities in newer markets like Northeast India, as well as appointing additional dealers, distributors, as we have already done in previous years. As we move ahead, we will remain agile and continue to adapt to the situation at hand, leveraging our strengths to emerge stronger from these testing times. And I will not take much of your time, but I will leave the floor open for questions so we can have further discussion. Thank you very much.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, a reminder, if you wish to ask a question, please press star and 1. Our first question comes from the line of Dhiren, an investor. Please go ahead.
Hi, good afternoon, sir, and thanks for this opportunity. So I have a few questions. My first question is, given the current industry environment that we are operating in, and the uncertainty that even currently prevails, where are we? How does it affect our long-term strategy? So we had been working on a few molecules on the technical side, and we were also evaluating CapEx to go beyond our existing capacity. So given the current scenario, do you see anything materializing on that front in the coming 1 or 2 years, or have those plans been put on hold?
Okay. Yes, due to the current scenario, there have been delays in implementation of CapEx project. We were expecting start of capital expenditure on one of our new manufacturing plant within the same site, which has been delayed. And now we are looking at starting the capex from September or October this year, after the monsoon season is over. And but the plans remain same, but there has been delays due to this current situation. We did not want to burden the current cash flow with the additional capex this year.
Okay. So, sir, would you be able to help us out, in terms of some numbers with estimated amount of capex, and if we started by September, by when do you think we could begin the commercial production, and what would be the sort of capacity addition that we would be looking at?
Okay. We are planning for a capex for a new manufacturing facility within the same premises for additional 2 new products, and the expected capex is about 10 crore rupees from cash flow and 10 crore rupees from borrowed funds. And we expect the plant construction to be over in the period of almost about 8 to 9 months. Since we have already done the groundwork, we were about to start the construction work. The groundwork, everything is ready. We just have to take the decision and start the work. So we will see production starting somewhere around July, August next year.
Okay. And what would be the incremental capacity from this capex?
This is a new capacity for new molecules.
Okay.
And so for the incremental capacity for the current product, capex already has been done. We have increased the capacity, but unfortunately, due to the current situation, we could not use the existing capacity for the products which we are already manufacturing.
Okay. So, sir, if my understanding is correct, for the existing products, the capacity that we have increased, our cumulative capacity as at date stands at 6,000 tons per annum.
Yes.
Is that understanding correct?
Correct.
Okay. So with this new capex, like what in terms of percentage, if you could help me understand, will it go up by 20%, 30 odd percent, or any ballpark figure that you can
capacity will go up at least by about 20%. You can say.
By 20%. Okay. And you did mention that these are going to be two new products. So in terms of the product profile, again, if you are open sharing the names, that would be really helpful. But in case you are not, can you just help us understand whether these are molecules that would be higher up the value chain than the existing product portfolio?
Both.
And would,
Yeah. Both. Sorry. Yeah. Go ahead.
And in terms of margin profile, would this yield better margins than the current portfolio?
Yes. Okay. There's the new products. One is an insecticide, another one is an herbicide. Both are generic products. We have been working on development of this both molecules from last few years, and the pilot trials have been going on, and now we are ready to launch these two new molecules. Margins are better than the current products which we are manufacturing. And value chain wise also, yes, both molecules are expensive products, upwards of $15 a kg. So, yeah, that's the details I can share as of now. Yes.
So my second question is if you could just give us the update on the registration status of triclopyr and bifenthrin that we were looking forward in the international markets.
Both are still pending. We have submitted the additional data and everything what was required, and we are awaiting response from registration authorities. We expect at least in this coming financial year we should have at least these two registrations.
Okay.
Yeah.
So the next question is a bookkeeping question. Now in your results that you've submitted for the year, there's a line item intangible assets under development, which to my understanding is the costs that you incur for the registration of your products. So this cost has broadly remained range bound for the last 2 years from roughly about 2.5 to 3 odd crores. So anything you would like to say on that, like this expense is expected to go up in the coming years as in when we look forward to launching new molecules, or given the current environment we would hold back on that expense for now?
No, we have a budgeted expense for generating data for new products which we are already working for future. So this expense will go up. We have a budget which we will spend this year, and so it depends how much data gets completed during the financial year and how much money we pay. So it will get added.
Any ballpark figure that you would be comfortable sharing in terms of if we could model this expense? It would be in the range of 4 to 5 crores, probably higher or lower.
No, the budget for the year is 2 crore rupees. Yeah.
Okay. The budget for the year is 2 crore.
But how much of that gets completed, we need to wait and see.
Okay. Yeah. And so the last question from my end is from your opening remarks, you did mention something on the lines of interest cost for the purchase of raw materials. So did this happen because of some delayed payments, or there's some other angle to it?
So beginning of the year, we had not planned for the long credits which we will need to hold the raw material and the finished products in stock. So during the year, we had to convert many of our purchases on credit, and we had to then incur this additional interest cost for the purchase of our raw materials, which we had already purchased earlier. And that's why we booked the interest cost for the whole year in last quarter.
Got it. Fair enough.
That's what counted in the last quarter.
Okay. Thank you so much for this, sir. This was really helpful. Thank you.
Thank you.
Thank you. Our next question comes from Ashaf Patel with Molecule Ventures. Please go ahead.
Thank you for the opportunity, sir. Sir, my first question is on the gross profit margin compression. So as you have already mentioned in the PPT that that was on account of liquidation of high cost inventory. So can you please guide us how the same impact would be dragged even in Q1 and Q2 going forward, or has it cleared everything?
Can you repeat the last part of your question? Your voice did not come through properly.
So have we cleared the entire high cost inventory which had impact on our gross margin? Continue for
yes. No, we in March we liquidated a large part of it, but not the whole inventory what we had. But subsequently in April and May, we have also liquidated the old inventory. So there will be some spillover sales in Q1 also this year.
Okay. And that's about it. So the Q1 should continue seeing the impact on the gross margin level, but nothing beyond.
Margin wise, yes, Q1 is still a challenge. We are trying our best to improve the same, and we have been able to generate some additional business in different markets for new molecules. And to some extent, we have achieved what we want to, but we still have a month to go, so we are trying our best to revive the Q1.
Sure. And how are you seeing on the demand side Q1 compared to Q4?
Indian demand is very strong. The Indian agriculture season looks to be normal, and we are going to focus more on our branded sale business in India. As far as overseas demand is concerned, demand has started coming in. There is some revival in demand, but it is not going to reflect immediately on performances since there is a lot of pipeline stock with the manufacturers, with the traders, with consumers, everyone. And the prices are consistently still falling. It has not stopped as yet, so difficult to make judgments on margins.
Okay. So sir, can you please guide me with average product prices for our top 3 key products, say in Q3 versus Q4, versus where are we right now?
Q3 versus Q4, we saw about 10 to 15% price drop. Q4 till now, there has been about 5 to 7% further price drop, and we don't know where it will end.
Okay.
Yeah.
But sir, usually, as we know, this is not the first time the industry is facing challenge. We have seen agrochemical downturn cycles in past as well, but somehow this time around,
such a long cycle. Yeah, everybody has seen this cycle, but such a long cycle is I think the first time this has happened, that this consistently falling prices have lasted beyond 5 months, 4 to 5 months.
And what do you think, sir, would be the key reason for the same?
Because I think there are several reasons, but one of the key reasons is that due to COVID, everybody overbought whatever they needed in 20 and 21. Everybody overbought because there were consistently lockdowns happening in China, in several other countries, and keeping that in mind, nobody wanted to be out of stock, and it's just because of this last 2 years, everybody, because of that, there is a lot of stock available everywhere, and manufacturers also did the same, thinking that the demand is strong and it will continue to be strong.
Sure.
Yeah.
And sir, coming on the capex front, we have recently expanded, as you mentioned in the opening remark as well, that we have expanded our capacity from 4,500 to 6,000. So considering the current environment scenario, how do you see the capacity utilization going forward in the coming years, if, for example, specifically in FY24?
So far the forecast from various markets in which we are selling our products, forecast still remains robust. We are still looking at substantially higher number than last year. But due to the past couple of quarters, I really don't want to make any large claims that we are going to utilize the full capacity as yet.
But what would you aspire for, sir, on a consolidated capacity utilization level for FY24?
If I go by the forecast, we will utilize almost 80% capacity.
Oh, okay.
Yeah.
In FY24 itself, the incremental considering even the incremental capacity, so the 6,000.
Yes. Yeah.
Okay. And what
just to explain you, even if next month forecast, if you see from my customers, it is very high, very robust. But due to these prices falling consistently, I'm not very sure that forecast gets converted into orders. So we are remaining bullish, but at the same time, we need to have that caution also.
But sir, if we take 2 quarterback pricing, which was the steady run rate, on those pricing level for our key products, what kind of revenue can we generate on 80% utilization, considering the incremental capacity as well?
Then we would be, at least 20% higher than our FY22 sales.
Okay. So FY22 we did close to 312.
300, yeah. So 350, something like that.
370.
But I really doubt that in this financial year the prices would go back to
mean level. Yes.
Yeah. Since there is a huge amount of stock available with everyone.
So even now you feel that destocking is not completely...
Not yet over. There is still a lot of inventory. Just last week we had a conference in China and we met most of the industry from China and India. Seems everybody has stocks, huge.
So how long do you think? I understand that on the margin front we might very well sort of bottom out in 1 quarter. But how long do you expect the industry to?
2 more quarters for things to really improve on price front. Demand wise, yes, it will come back. Demand is showing strength and it will come back. But prices, I'm not too sure. At least 2 quarters.
Okay, got it. That's all from my side, sir. Thank you and all the best.
Thank you.
Thank you. Our next question comes from Parth Garg with Mittal Analytics. Please go ahead.
Hi, sir. Thank you for the opportunity. Actually, I wanted to ask most of the questions were answered. So my question was on what are the updates on Brazil registration for our product?
So as I said earlier, we are awaiting response from the registration authorities. We have submitted all the documents which we were to submit. And we expect both the registrations at least in this coming financial year.
Okay. And what are the updates on registration of a new molecule? You mentioned in the previous Concall that it can be completed by around March 23. So
we have applied. Yeah, we have applied new registrations also. That is on time. But now, when we will get those new registrations, we have to wait and see.
Okay.
Yeah.
And these are the registrations for the product which we are going to manufacture in the new facility? Or?
Yes.
Okay. Thank you. That's all from my side.
Thank you.
Thank you. Our next question comes from the line of Samad Singh with TPF Capital. Please go ahead.
Good afternoon. Thank you for the opportunity. For financial year 23, what were our sales under the contract agreement?
Contract manufacturing, our sales. don't have the exact number, but it was little less than last year.
So last year we ran close to 80 crores, right?
Yeah, little less than last year it was.
So say 25 crores?
About 70.
And
I don't have the exact number, but
okay. So
it was less than last year, yeah.
So it's a 3-year contract, right? So for 250 crores was the total value of the contract over 3 years. So the balance 100 crores that is left on the contract, they will be making that purchase this year.
Yeah, correct.
So
we already supplied quite a lot of quantity in April and May. June, July also is planned. So that is going on.
So that is
come back to almost normal levels this year.
So irrespective of the demand, your clients will be purchasing this 100 crores worth of product this year.
Yes, they will be. The only problem happens is that at times we have to hold stocks.
No, it was a 3-year contract, and this was a guaranteed purchase, right? Or not?
Yeah.
And this was the contract was a volume contract or a revenue contract?
Volume contract.
Okay. So the balance, whatever volume that they have to purchase, they will purchase it, right? It's not about you holding stock. I mean.
Yeah. So this year, if they are to suppose they are to purchase 1,200 tons, that will happen.
That will happen regardless, right?
Yeah. But we are looking at much higher number than that. That's the forecast. But let's see. But at least 1,200 we'll achieve.
Also because we were looking at a much higher, if I remember Q2 call, we were looking at much higher, and we were stocking inventory based on that. And we had to take a huge write-off on this inventory in this quarter. So, I think from the forecast.
Along with this contract manufacturing, our existing customers of the same products also in different various markets also did not, buy the expected quantities. So that also got affected. That also affected the performance.
And what is the plan as far as contract is concerned? Would you be renewing it, or what is the status?
We will be renewing the contract.
And would it be for a similar volume amount or higher volume?
I think the contractual quantity will remain same, but we have increased the capacity, and supply forecast is much higher than the contracted value. But looking into the current scenario, I don't think we can expect a contractual obligation higher than the one we have now.
Okay.
Thank you.
Thank you. Our next question comes from the line of Rishikesh Oza with Robo Capital. Please go ahead. Rishikesh, your line is unmuted. You could please ask your question.
Hello.
Yes.
Hello. Am I now?
Yeah.
Okay. Hi, sir. Thank you for the opportunity. I want your outlook on EBITDA margin. So, what EBITDA margin are you looking at for FY20?
I'm not able to hear the question properly.
Am I audible now?
Yeah, now you are audible.
Okay. My question was regarding the EBITDA month for FY24. So, could you share a broad guidance? What exact EBITDA margins are you looking for?
Very difficult to give guidance at the moment. I think by in the next quarter meeting Concall, we will have a better idea of where the prices are going, how the market is performing, behaving. Beginning of the year, and then especially in this situation, very difficult to put a number to that.
Okay. No problem.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. Our next question comes from the line of Sushir Bajwani with Greenedge Capital. Please go ahead.
Am I audible, sir?
Yeah, you are.
So I just want to understand. So last year we were pretty much optimistic on things, and slowly the pricing has kind of not moved against us. But minus the external factors which probably have affected. What do you think has gone wrong? Probably as a business, if you think if there is anything which has gone wrong with us.
I think specifically, if company-wise, if when we analyze the situation, we have realized that we are very thin spread as far as product portfolio is concerned. We need to increase our exposure and manufacturing of more molecules, and that's how we will be able to prevent such kind of current situation in future again. And and at the same time, we also need to concentrate more on the branded sale formulation business in India. And we have already started working on both these, and we'll try to achieve a good volume and good business of branded sale formulation in India. And we are also adding 2 new molecules in manufacturing. And both put together, we prevent us from getting into this situation. And yeah, that's it.
So because if I understand correctly, previously our focus was to actually grow technicals to a certain extent, right? Where we are saying that we probably have the business grow to an extent where it probably contributes more because also kind of giving us margins. But then do you think that this is what is kind of changing now and you want to probably...
No, I think it's just the bad time that we spent on the capex of increasing production capacity of the existing molecule. And due to the current situation, we could never achieve those higher production levels and get those numbers. Our new product introduction project is on track, but delayed a little bit because we have not invested in the capex this year for the new manufacturing plant for new products. But as far as the current situation is concerned, it's because both the products which, our main large 2 products are not doing well in the international market volume-wise, and there's a lot of stock available with many manufacturers.
Right. And sir, in terms of the cost, when I see there is a rise in the employee cost, what exactly is attributed to that? Because there is some rise in employee cost and then there is a rise in other costs.
I need to check. I don't have those detailed numbers on that.
Because essentially, if I look at the FY23 numbers, I mean, I would say that most of the material cost has probably remained more or less similar. But there is a sudden rise in this employee cost to move from 3 to 7%. So I'm not sure why it has moved so high. And obviously, I understand the other cost would be probably because we are probably in the holding inventory as well. So that would be a cost which will be kind of hitting us. So if you can just look into this and let me know what exactly has
I'll check on the numbers and I'll get back to you.
And so one more thing, sir, since we have not made any kind of profits, sir, why are we paying out dividend this year, sir?
See, we are maintaining our dividend payout policy, and we are looking at current year with revival. And we have experienced quite a large turnaround in sales-wise for the first quarter. And the forecast also is very robust, so plans remain same. And that is why we don't want to deviate.
But sir, given the circumstance, obviously, since we need to conserve cash because our borrowings have also moved, so why should we actually pay out? I mean, that doesn't make sense at all.
That's the board decision. I cannot answer you more than that.
Right. So I'll wait for the cost part probably, to be kind of All right. Thank you so much, sir.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. A reminder, if you wish to ask a question, please press star and one. As there are no further questions, I would now like to hand the conference over to the management for closing comments. Mr. Ashit,
Sorry. Yeah, thank you everyone for attending the conference call and looking forward for your support and looking forward to communicate progress in our business in the next conference call again. Thank you very much.
Thank you. On behalf of Aimco Pesticides Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.